Hello everyone, and welcome to this week's Motor Trade Radio podcast. Powered by Motors, the driving force behind multi-site advertising. With Philip Nothard and Curtis Hutchinson, bringing you all the chatter that matters.
Well, Curtis, I think, we're getting all seasons at the minute. So we're talking recently about me getting a replacement vehicle to get me through the winter and the snow, because my BMW 5 Series won't be any good. But I think I need to reconsider what I'm looking at because of the winds that we've been getting recently. I don't want a high-sided vehicle now, do I? It needs to be... do I need an SUV? Do I want an SUV in this wind? We'll see. But still on the search for a car at the minute.
Yeah, well, I'm glad you brought up SUVs because that's a theme we'll be returning to later in the podcast. And if you were tempted to buy an SUV, I'd suggest you don't park it anywhere in Paris, but more of that later.
But I mean, remaining with cars and new cars particularly, that we're talking about, you've put this in terms of new car brands corner, because I think more and more recently, Curtis, we've been talking about not just new cars generally, but new car brands entering the UK market. That are new operators entirely coming in to look at the UK market, and it seems to be increasing very quickly.
Yeah, definitely. I don't know about you, Phil, but I'm getting hopelessly confused by the number of new brands coming to the UK. And this week we've got news of two further brands launching, well, certainly in Europe and probably in the UK. So this all follows. So 2 weeks ago, we were talking about these new Chinese brands, Series and Skywell, that are coming to the UK as soon as Q2, actually. And hot on the heels of that comes news that Chery is to launch a third brand, if you can believe that, following this year's debut of the Omoda, next year's launch of the Jayco SUV brand. And these will both be followed by the Xlantix luxury brand. You heard it first here on the Motor Trade Radio podcast. And also, Chery's not ruling out manufacturing in Europe. So a lot happening there, certainly from Chery, and certainly in terms of new brands coming this way. But you've got news of another new electric brand, haven't you?
Yeah, as you say there, Curtis, that we know that previously Apple had talked about entering the new car market and mainly focusing on autonomous vehicles at the time, but they very quickly exited, and we know autonomous vehicles did slow down in terms of appetite for manufacturers as we went in the pandemic, and they had to focus on different things and different strategies and things like this. But there are reports that Apple are now once again planning to launch an EV after it, I say, had abandoned its self-driving Titan project previously, and that the car looks as though a new car will go on sale in 2028 and have made more than limited self-driving capabilities, and saying it's pitched itself to rival the Tesla. So we know that Tesla has got that self-driving capability, not fully in all markets and all vehicles, but it has the capability, and now obviously working on the data for it to be fully autonomous in the future. But yeah, Apple are now returning to the market again.
Yeah, so there's another new car brand to add to the growing list, and no doubt we'll be updating this list in a couple of weeks' time.
Yeah, definitely. And on this week's podcast, we've got an extract from our interview with Darren Martin, who's Director of Valuations at CAP HPI. He was talking about how the trade values have performed over the course of the month of January, which he shared in the media mid-month that there were signs of stabilising, and the market was slowly recovering, slowly starting to pick up. So please do stay tuned and have a listen to that extract. And if you haven't done already, then download the full interview that was shared on Friday afternoon for the full interview there with Darren, who does talk about, some of the nuances in the data, some of the brands that have seen increases in valuations, and some of those that have still felt a little bit of pain in the early trading weeks of 2024.
And also look out for our special weekday pod interview with friend of the show, Mike Allen. Now, Mike will be familiar to many listeners from his time as one of the country's top analysts, regularly commenting on trends in the franchise dealer sector. He's now the MD of Cambria Private Capital, which is a new startup investment arm of the dealer group, Cambria Automobiles. And he shared how the business is working with startups to deliver next generation services for dealers, and also how it's able to trial products and services in a live environment at Cambria. So we recorded the show just yesterday, and it was a fascinating chat, wasn't it, Phil?
Yeah, I mean, because you look at it and think about perception of what they're doing and why they're doing it, but actually in the conversation it does share a lot of the detail as to what they are getting involved with. Yes, they are getting in with AI businesses and thinking about that fintech market, but obviously it is really focusing on that dealer sector, and it's trying to work with dealers to get them a little bit of growth, a little bit more across the market. But it is a fascinating interview with Mike, as we knew it would be, and he also does share his view on how the market is performing at the minute and his view on the dealer sector. So well worth a listen.
Yeah, and that'll be live on your podcast feed from Wednesday. Headlines this week come from Motor Trader, Car Dealer, AM, Motor Finance, and Automotive News Europe. Starting with, buyers are using more car search websites before splashing the cash. NFDA survey reveals fears for EV car and van sales in 2024. Europe's biggest selling car of 2023 has just been named, and for the first time ever, it's an EV. We revealed the first dealer acquisition of the year, and we asked just how much bigger are new cars getting. But before we take a look at these headlines, here's an extract from our chat with CAP HBI's Darren Martin, talking about how values performed in January.
It's a very small drop at 3 years, 60, which is 0.1%, which is negligible. It's less than £100 on average. And as ever, there's lots of moving parts within that, but we're certainly seeing that as a positive sign after what happened in the final quarter of last year, where values dropped by over 10% in 3 months. So it's certainly stable, and that's one of the most positive Januaries that we've had over the last few years. So yeah, definitely some more than green shoots, definitely.
And I mean, you mentioned there 0.1% down, and we talk about devil in the detail every month that we do catch up on these interviews. And I mean, do you want to talk us through some of because obviously we saw some big movements last year at the end of the last year in terms of where the market started to realign, and we went into the final quarter of 2023. And there was this expectation: when was the market going to start to pick up again? When were the buyers going to return and start stocking up and things like that? Do you want to talk us through some of the numbers? Because it's not all a fairly level market, but there are some ups and downs through the market, aren't there?
Yeah, definitely. So yeah, I think for when it was going to recover, we saw some recovery in December. December is usually a fairly weak month. It wasn't as weak as October and November, and there were certainly some buyers out there. And there's certainly some buyers that took advantage of some of the low prices, and they're feeling quite good about things at the moment because they bought cars in December, and obviously a lot of the remarketers are putting their prices up in January. So if they stocked up, then that's sort of great news for them. Yes, sort of the headline figures. Yeah, that obviously the 0.1%. At 1 year old, it's 0.5% down. So slightly more, a couple of £100 there. Maybe a little bit of sort of OEM activity and some late plate volumes coming in, and some new car sort of comparisons to be made. There's some keen new car deals at the end of December and carrying on now, really. Looking at sectors, so we've got 3 of the smaller car sectors, so city car, super mini and lower medium are all positives this month on average. So you've got super mini leading the way there at 1.1% increase. And obviously so they're price point cars that are bread and butter for the dealers, that they know they can move quickly, low risk, low price. So they've done very well. Obviously the largest sector is SUV, and that's stayed level on average at 3 years, slightly down 0.6 and 0.7 at younger ages, 1 year and 6 months. But yeah, overall positivity across the board, really. Nothing has come down dramatically. Convertibles are the weakest sector at 1.7% down, but that's not unusual for a winter month either. So yeah, it's good across the board on the values, and that's based on the data that we've been receiving, the sold data we've been receiving. Started off a little bit weaker. We were 0.5% down around the 9th, 10th of the month, and since then we've seen a recovery. And if it had been another couple of days for us to cut off live before monthly deadline, it would have probably been a positive month. So yeah, those live customers we'll be seeing that over the couple of days before we actually publish. So there will be some strength there, because it's improved as the month has gone on.
So as I said earlier, I mean, always a great chat with Darren, sharing a bit of the detail behind the headline of what's happened in the month of January and the way the values are starting to move as we head into February. I think clearly to say that the market didn't really get going as normal in the closing months of 2023 there, but the feeling is it's just starting now to pick up. Dealer buyers have returned to the market. Activities are starting to pick up a little bit. Conversions and percentages are starting to increase a little bit. So there is a bit of an optimism out there. But like I say, a great chat as always with Darren.
Yeah, definitely. And do have a look at the full interview that we did with Darren, because he, as ever, he goes into detail across different segments, fuel types, price bands. So a lot of detail in there into what powered the January market. So first headline this week comes from Car Dealer, and the headline is "Car Buyers Doing More Research Online Before Splashing the Cash Finds New Survey." So this is a report on some new research carried out by Motors. So it was an independent survey, and it forms part of their Motors Digital Touchpoint survey. And what they did was they polled the views of 3,000 in-market buyers to see how they're searching for cars. What are their current thoughts on how they approach the car buying journey? And I guess what's particularly interesting from the research is that it's found that the average car buyer now visits 4.2 car search websites before they make a purchase, and that's actually up from 3.5 in 2021. So it's just showing that buyers are using more sites. I mean, they're certainly visiting dealer websites, but they're also visiting car search websites to really find the car they're interested in and to start validating some of their choices, because it finds that 2/3 of buyers said seeing a car advertised on multiple websites actually encouraged them to make an inquiry or visit a dealership, compared to 60% in 2021.
Yeah, no, like you say, there is some very positive numbers there, saying that as you said there, that that 84% said they'd use multiple sites to double check the car they were interested in terms of price consistency across the different platforms. And that's quite interesting, that, because we talk about agency model for new cars quite a lot, and that's about price transparency across the new car market so that everybody gets the same. But actually, this survey does say that the dealers are looking for that when they're looking for a used car as well, that vehicle is advertised the same across all the platforms that they're searching, which is positive, really. And I think it's positive for the the advertisers that consumers now are looking and doing a lot more research in that digital space as well.
Yeah, and so some other findings within the research included 82% of buyers appreciated being able to check the car's details were the same across different websites. Three quarters said it gave them the confidence that a specific car was actually genuinely for sale, while 71% said it makes specific cars stand out if they've homed in on a particular car and they see it advertised across different sites. It does make them stand out according to these findings.
Yeah, and I think it is good because you hear across the network where vehicles are advertised, fraudulently, just to try and capture consumer details and activity in the consumer. And I think they're advertised on different platforms at a very attractive price, just to try and gather that consumer data. So I think this is positive that actually consumers are picking up on that a little bit, and they are checking that that vehicle is correct and that it is advertised on multiple platforms. Because if you're a car dealer, you do tend to advertise on multiple platforms as well as their own website. So I think this is positive. But there is a nice little quote in here from Motors Marketing Director Lucy Tugby that we've had on the podcast before, saying that the cost of living crisis and the low consumer confidence are encouraging buyers to search wider, with our research showing that how seeing the same car advertised on multiple search platforms helps to reassure them before reaching out to dealers, saying that for many buyers, purchasing a car in the current climate is a daunting prospect. That's why for dealers, it's more important than ever to build trust and confidence online across multiple websites, something we have been encouraged, long advocated, whilst also being empathetic to the financial concerns of the consumer. So very much supported findings there by Lucy into on this.
Yeah, definitely. And I've had a look at the digital touchpoint survey, so some of the data that's been amassed within that research, and there's more to come out. I mean, it really is a fascinating piece of research. So we will be returning to this, I'm sure, over the coming weeks.
And heading over to Motor Trader, so we're going to talk about EVs now, the topic of the moment. So the NFDA dealer survey reveals fears for EV car and van sales in 2024. So we all know about the ZEV mandate coming into effect for the UK on the 3rd of January this year, where cars have to achieve a 22% of their registrations this year to be battery electric vehicles, and for LCVs to be 10%. And if they don't achieve that, then there are fines incurred to the manufacturer. But we know how challenging it is at the minute to get that private sector to transition to EV. So I think I suppose really we knew this could be the case with this one, couldn't we? That there is a bit of a challenge there and a bit of negativity from the dealer network as to the market in 2024 with the transition to EV.
Yeah, you're absolutely right, because with the ZEV mandate, what we're already seeing is how much fleet is contributing to achieving those targets. That's where the main push is coming from in terms of OEMs getting their quotas. But what does this mean to retailers? And this is why the NFDA survey is quite revealing, because it's asked dealers what they think, because they've obviously got the challenge of stimulating retail demand. So within the survey, just over a quarter of dealerships predicts that EV sales in 2024 would be better in comparison to 2023, but only a further 4% said they would actually be much better. And within the research, it goes on to say that only 7% believe that the electric van market will fare well in 2024, with the majority holding a neutral view. So that's over half at 56%. And that's in itself, that's particularly interesting, because only last week or the week before we were reporting on the van market and how that EV van market has really grown significantly, albeit from a very, very low point. But again, a lot of this will be driven by fleet demand.
Yeah, and they do highlight that the top three most prevalent reasons given by dealerships as to why consumers are not considering purchases of an EV include range. So that range anxiety is still a concern at 82%. 82% also highlighted the lack of the charging infrastructure, which we know, I think recently the UK government failed on their target objective for installation of UK charging infrastructure, and cost, slightly less, at 80% cited cost of EVs as being a clear concern. Now, the new entrants that we've talked about this week and the other week might be one of the solutions to cost, because they are coming in as a cheaper proposition. But today they've still got a job to do in terms of that brand awareness alongside that cost of entry, aren't they, some of these new entrances?
Yeah, and the survey does go on to also show what else is on dealers' minds. So it goes on to say that as we enter the election year, business rates have been ranked by dealerships as the top issue, which they would like to see the various political parties tackle, with 47% of dealers ranking it as their first choice. And this was followed by corporation tax at 38%, fuel duty was the third choice, but EV price incentives and charging infrastructure were ranked fourth and fifth respectively. So it shows the concern of dealers and in terms of running their own businesses, and in terms of where they want the stimulation to come from to create some retail demand for EVs.
Yeah, and Sue Robinson, who's the CEO of NFDA, does follow that up, saying that, quoting that with the spring budget set to be delivered on the 6th of March, and obviously a general election likely to be called in the second half of the year. We don't know that yet. Still a lot of speculation about that. There are many permanent issues flagged by the survey, which NFDA will continue to raise with the government. So NFDA obviously very focused on trying to help and support the dealer network, and the NFDA do put a highlight that they have already highlighted various issues with the Chancellor ahead of the budget submission deadline of the 24th of this month. So NFDA sort of trying to highlight continually with the UK government the challenges that the retail automotive sector in the UK face with everything going on.
You're listening to all the chatter that matters on Motor Trade Radio. Powered by Motors, the driving force behind multi-site advertising. This is your weekly one-stop shop for all the biggest car retailing headlines from across the media, available on demand, wherever you are on your podcast feed.
Next headline is from Automotive News Europe, and I won't read the headline out just yet because it will give the story away. But what they've done is they've compiled the top 50 biggest selling cars, new cars, over the course of 2023. And it does make for fascinating reading, because just looking at the top 20, and if you've got access to Automotive News Europe, there is a really good PDF that you can open up, and it will tell you the top 50 for the 12 months, as well as top 50 sellers in December. But just looking at this list, this top 50 list, Phil, it's mostly green, isn't it? Most of these cars have increased sales year on year, and some significantly so.
Yeah, there's a couple of reds in there. Actually, I was call out a couple of reds first before we
Yeah, yeah.
talk about some of the big ones. I mean, some of the declines may not surprise some of the listeners. A-Class down 9.8% year on year, and we know that Mercedes are going through a transition of their model lineup, so that's probably something to do with what has gone on there. Your Hyundai Kona, interestingly, has dropped 3.2%. Peugeot 3008 has suffered down 9.7%. Fiat 500, the little European car, has dropped 2.6% year on year, and the Toyota Yaris down 9.5%. So a few there that have suffered in terms of that volume through year on year across the European market.
Yeah, and you mentioned the Fiat 500, and that was the 28th best-selling car of the year. A car you would expect to see higher because of the potential volume of that market being a small, affordable car. But yeah, that's 28, and it's gone down year on year. But this does rather lend itself to a top 10, doesn't it, Phil?
Yes, I'll let you go
So
from that one.
So here we go. So the top 10 best-selling cars of 2023 across Europe were: number 10, Skoda Octavia; number 9, VW Tiguan; number 8, the Toyota Yaris Cross; number 7, VW Golf; number 6, the Opel Corsa; number 5, Peugeot 208; number 4, Renault Clio; number 3, the VW T-Roc; and at number 2, the Dacia Sandero; and number 1, it's the Tesla Model Y.
Yeah, just before we get onto some of the percentages, just what was number 10? The Skoda. You need to get your
Skoda.
pronunciation
Oh yeah,
correct
Skoda.
on that one now. Forget about that one.
Oh, I'll correct you for Hyundai earlier on.
Hyundai. No, I think you're right there, and getting back to the original story, what is very interesting is the growth of some of these in that top 10. I mean, I talked through some of those declines, and they were very small. They were below double-digit declines in terms of that year on year. But you've got there, as Curtis said there. I mean, the Skoda Octavia is 43.5% up year on year. The Yaris Cross up 29% year on year. The Opel Corsa, as we know, a Vauxhall, but up 15.1% year on year. And the Renault Clio did very well at 41.6% year on year, but not quite as good as the Tesla, did they?
No, because that was up a whopping 85.2% year on year, which saw the overall total sales for the Model Y rise to 254,822. So that's actually 117,000 more than the previous year. So absolutely a meteoric rise there for the Model Y. And I guess what surprised me here was that the Model Y is not a cheap car. It is Tesla's SUV model. It's a big SUV. Certainly within the UK, the prices range from 45,000 up to 60,000. So it's by no means, an affordable mainstream car, but it was the top selling car across Europe last year.
Yeah, and the story does cite as well that not only was it Europe's top selling car as well, it was actually Germany's best selling battery electric car last year with 45,800 registrations. And that's the figures quoted by the KBA business over in Germany there. So, the Model Y does seem to be doing very well. And I mean, you look at the total volume for Tesla as a global market. I mean, there's 250,000 of those being just the Model Y in Europe alone. So significant benchmark there for Tesla to shout about.
And within the story, it's notable that they draw attention to Tesla actually cutting the prices of the Model Y this month. So even though it was the biggest selling car of last year, Tesla have seen the need to reduce prices, and they do actually cite the different European markets. But just looking at Germany, which is the key market because it's the biggest market, they're cutting prices for the Model Y by €5,000, which is around 9%. So prices now start at just under €50,000 for the Model Y. So interesting why they felt the need to do that, as the car is selling so well at the moment.
Well, yeah, I mean, we'd risk going off at a tangent here, but definitely Tesla are getting a bit of challenge now from operators such as BYD and others. They obviously, think we won't get into what Tesla did and what Tesla continues to do. And I think general commentators at the minute as to the 2024 outlook, and particularly on battery electric vehicle residual values, Tesla does get mentioned significantly as, if Tesla decides that it's going to cut prices and things like this, then it has a direct impact on its peers in terms of that residual value market. So there is a bit of concern in the way Tesla do operate, in the way they reprice vehicles, but at the same time he has his production objectives to achieve, and obviously if he feels that he's losing market share, then his answer is to cut the price. But I'm sure we'll talk about it a few times in 2024, no doubt.
I'm sure we will. And just as a footnote to that story, the highest ranked Ford vehicle was actually the Ford Puma at number 11. So Ford not even in the top 10 there, which in previous years we would have expected to have seen 2, maybe 3 models within the top 10.
Yeah, definitely. And heading over to AM Online now. So I think is this the first acquisition of this year, 2024?
Yes, it's the first reported one. Yeah.
And this is the Grainger Motor Group acquires EMG Anglia, which nears AM100 scale. Now, what is interesting in this is the size of the two businesses and what Grainger now is as part of this acquisition.
Yeah, definitely. So EMG operates 11 sites across Norfolk, Suffolk, Cambridgeshire and Lincolnshire, representing Kia, Mazda, MG, Nissan, Hyundai, Ford and Vauxhall. So a well-established, family-owned regional group there, a good size. And Grainger Motor Group. Now, a lot of listeners will be familiar with the name Grainger because it's actually run. It was only founded 12 months ago, so January 2023, by Neil and Harry Grainger, and they are the sons of David Grainger, who was the founder of Norton Way, a hugely successful dealership that's been running since 1989, when it was founded by David. And both of the sons, Neil and Harry, worked for David at the business. And this is their first venture outside of Norton Way. So what they did 12 months ago was they bought a small local group called Mantles, who I think they certainly represented Kia in Royston, but I think they only had 1 or maybe 2 sites. But what this acquisition does, it brings the total headcount for Grainger Motor Group up to 14 sites across that region. So turning it overnight into a sizable group, which is sort of heading towards the AM100 rankings now.
Yeah, and it does say that EMG's latest statutory account showing 116 million turnover. So the deal does mean that Grainger Motor Group will rapidly near the threshold of being, as you say there, an AM100 ranking. Very, very quickly. In fact, overnight, essentially.
Yeah.
I mean, what a purchase and what an acquisition, and what an opportunity for the team there to take that on, which is a rapid growth there. And saying that they quickly completed the acquisition. The second site, saying that they're growing very quickly with the purchase. So good luck to these guys. I mean, what a buyout.
Yeah, I mean it's a great purchase it's a great fit. And it was quite interesting within the AM story that there's a link to 12 months ago when they bought the Mantles Group, and when they were asked, what their plans were to grow the business, that they were saying they were looking at maybe adding 2 or 3 sites here and there. But they've certainly hit the jackpot with this, because 11 sites gives them the sort of critical mass that they need to grow as a group. So definitely a name to watch there, I think.
Definitely. Now, heading over to our final story of the day, and this one that Curtis alluded to right at the start there, it's you did a little bit of digging further into this one, didn't you? That this motor finance online have covered the story, saying that cars are getting 1 centimetre wider every 2 years, and that over half of new vehicles are now too wide for many on-street parking spaces is what the research is showing there. So this is research that has been done by the Transport and Environment, T&E, which says that the trend will continue due to the rise in sales of SUVs unless lawmakers take action. Now, you did, like I say, a bit of digging around this one, around what's happening in some of the European markets, and one in particular.
Yeah, definitely. So next week in Paris, there's a referendum about whether or not the people who live in Paris would like to see SUVs pay more for parking, because obviously they're bigger vehicles, they take up more space. But also higher polluters, with many sort of 4x4s bundled in with SUVs. So the proposal there is that SUVs and 4x4s up to 1.6 in tons, which covers pretty much all of them, that they will see parking charges tripled. So between 12 and 15 pounds would be how much they would pay an hour in Paris if the referendum goes through. But that in itself is an interesting aspect, because it is just showing how lawmakers can actually begin to take action, because they can see how cars are growing in size, and going back to the beginning of the story, growing in size by 1 centimetre every 2 years. So there is a limit, though, to the size that they can grow to, which is 255 centimetres, which is the EU limit on the width of a car, which was sort of take it into the sort of truck categories. So one to watch here, I think, Phil.
Yeah, and they're saying here that amongst the top 100 models in 2023, 52% of the vehicles sold were too wide for a minimum specified on-street parking space of 180 centimetres in major cities such as London, Paris and Rome. And that the research also finds off-street parking is now a tight squeeze, even for those average new cars 180 centimetres wide, whilst large SUVs no longer fit, measuring around 200 centimetres wide. Large luxury SUVs leave too little space for the car occupies to get in and out of vehicles. This is where you need the remote parking, isn't it? Where you can.
It is, yeah.
You've seen the adverts, haven't you?
Yeah.
Obviously, that's where the manufacturers are thinking ahead of this problem, that you're no longer going to be able to get in and out of your car once you've parked up. You need to get out of your car before you've parked up, and then remotely park your car up, which may get them around the problem. I'm not sure it will, but obviously that's what some of these manufacturers have been thinking about. But yeah, maybe I need to reconsider entirely what car I'm looking at next, Curtis.
Definitely. So the average width of new cars, as it stands at the moment, is 180.3 centimetres, and that's actually increased from 177.8 centimetres in 2018. So just bear in mind that the absolute limit is 255. So there's still a way to go, but by the time we get to 255, you won't be able to park anywhere.
No, definitely. You won't now. So I think think that's it for this week. So I think early in the week we sort of looked what we didn't have many headlines to talk about, and then as the week progressed, as always, it was kind of trying to be selective of what headlines we talk about. So as always, do head over to the trade medias that we've referenced and the others that we haven't talked about this week. Always plenty of content, always plenty of stories. We'll try and keep you informed continuously with the main ones. As we read through the headlines on a weekly basis.
But that's all for now. So many thanks for joining us on the Motor Trade Radio podcast. We're back on Wednesday with our exclusive interview with Cambria's Mike Allen. Until then, it's goodbye from me.
And it's goodbye from him.
Thank you for listening to the Motor Trade Radio podcast, powered by Motors, the driving force behind multi-site advertising. We'll be sharing all the URLs from this week's headlines on Monday morning. To make sure you receive them, just subscribe to the free newsletter on our LinkedIn page. Just search Motor Trade Radio Podcast.